everybody, good evening here from Berlin, Germany to you, wherever you are sitting here in the world. And welcome to another live episode of That Crypto Show. My name is Dirk Hartig. I'm the head of trading education here at primexpert.com. I'm also a professional trader with 25 years. Yeah, it's already been 25 years of experience. And on today's live episode of That Crypto Show, I want to talk about trading. I want to talk about investing in cryptocurrencies. And especially, I want to talk today about how to handle a bear market in cryptocurrencies like we are having right now. So what can you invest in? When can you invest in it? How do you can you time your trades? What is the whole development of the cryptocurrency market going to be within the next 6 months, 9 months, and 1 year? So really a lot of, I think, things that hopefully can help you, to stay patient and to define your own trading strategy and investing strategy in cryptocurrencies over the course of next months, really. I'm seeing we have quite a lot of people attending today. So if you are watching this live on YouTube, as always, this live stream is going to be divided into 3 parts. In part 1, I wanted to talk more about long-term perspective of cryptocurrencies and how you can, or how I, as a matter of fact, I'm trying to personally time my investing strategies in cryptocurrencies. So what is an indication for me that we've reached bottom? Where do I think the bottom is going to be? When do I think the cryptocurrency markets are going to switch from more of a bear market, or actually a sideways market in a bear market we're having right now, to more of a bull mode again? So it's more of a long-term perspective for those of you that are interested in investing really and holding onto your cryptocurrency for a long time. Second part of this video, I will talk about a swing trading strategy. And this one, so swing trading means, by the way, if you want to hold on to cryptocurrency positions more short term, meaning like maybe for a couple of hours to maximum a couple of days. This is what I define as swing trading. I'm going to introduce you there to a metric which I think really, if you're interested in this, is going to blow your mind. It's really, really, really good, and it's especially working very, very good in this type of market setting we have right now. So this is going to be the second part of the video. The third part of the video, as always, we're going to have a little bit of a Q&A session. So if you have any questions, that are burning on your heart, burning in your soul, ask them here right away. If you're watching live on the chat, if we have enough time later on, I'm more than happy, of course, to address those questions. If you are watching a recording of this video, you're, of course, also invited to leave us a comment with your question. I'm going to answer the question, if possible, right away there. If that should not be possible, and maybe your question is a little bit more complex, you always have, of course, the opportunity to contact us by email under academy@primexpert.com. The other thing you could do is join us on Discord. So we have a Discord server with a lot of traders being active there, where I also have my little academy portion there. And a lot of the stuff I'm doing on a weekly basis here, either on That Crypto Show or in general about trading, I'm sharing before I release the videos there. So you might want to join really Discord if you want to stay a bit ahead of the crowd and have an advantage in information. And other things, everything else you really need in order to stay up to date, you'll find in the description of this video. So you'll find links to sign up for an account at primexpert.com. You'll find links to follow PrimeXPT, the PrimeXPT Academy, that is, on Twitter. You can find links to follow me on TradingView. And for the resources I'm going to use today to introduce to you what I'm doing there in terms of research, everything you'll find in the description of this video. For us, the greatest reward, of course, is if you like content like this, leave us a like, subscribe to the channel, open a Prime XPT trading account. That way we can continue to offer you really free great stuff like this. And I think especially today, you're going to hear some things that you really haven't heard anywhere else. We are really going to do the deep dive there. So let me quickly look in the chat. Okay, cool. Right. Okay, let's jump into it then. I'm going to make my screen here a little bit bigger so you guys can see a bit. And just a really quick recap of what we've been seeing really, I have to say for almost a month, for precisely almost a month, that is today or tomorrow, as a matter of fact, that we've been in this channel here of Bitcoin between really this tight squeeze between around about 28,500 on the downside and 31,500 on the upside. I've said numerous times on Discord, I've said also numerous times in videos now, that I'm waiting really for the volatility breakout to the north or to the south. I don't know which one it's going to be honest with you. I don't think anybody can really know in which direction it's going to be, but it will come sooner or later. And a great metric to always get a feeling for situations like this where you have squeezes of volatilities is if you just apply Bollinger Bands in a standard plain vanilla to your candlestick charts, and you can see how close those are together. But I don't want to bore you here really with things that I've been talking about, especially in the last video. What I really want to talk about today in terms of long-term perspective and really in terms of timing also, where the market could find its bottom and and I think this is also very important, what to expect in terms of bull market for the next months and years, is that we are not going to use classic charts. So this is something you, at least in my opinion, cannot forecast if you just apply some magic indicators to a candlestick chart or Renko chart or whatever chart type you like to use. For this, you really have to go a little bit deeper. And one thing you can use for this is so-called quantitative analysis. So this goes a little bit deeper. It also takes on-chain metrics. It takes data outside of the bubble of cryptocurrencies as well into account and puts those into a model. And I think it's something that's dear to my heart, because I'm a very data-driven person, especially when it comes to long-term investments. And nowadays, there's so many great tools where the amateur trader in brackets can really use that also to actually time investments decisions in a way that 20 years ago only professional traders in hedge funds with millions and billions of dollars of revenue could have really dreamt of. And there are two of those things I want to introduce today. The first one is a website called here Into the Cryptoverse. So both of those resources I am personally using to make my trading decisions. So it's not hypothetical or you should have, could have, and so on. What you're hearing here, this is really what I'm using every day for my trading decisions. And this one is called Into the Cryptoverse. You'll find the link to this one and the other one I'm introducing to you also in the description of this video, so you can kind of try to recapture for yourself what I'm telling you here. It's always good to do things in your own pace and not too much listen to the opinion of other people. This is like really one fundamental. Now, good news for you. If you are watching this, you are among those very tiny percentage of investors, of new investors probably to cryptocurrencies, that have not thrown the towel into the ring. There are a lot of new investors that, especially after this Terra Luna disaster, decided to, I want to stop trading cryptocurrencies. This is all, one big scam or BS or whatever you want to call it. I don't want to have anything to do anymore. I've lost so much money. Just leave me alone with this, which is a natural human reaction. However, in my opinion, what really differentiates amateur investor from a more advanced or even professional investor is that you take those times where we are in a bear market and use them to educate yourself, to define your strategy for when the next bull market is going to arrive, because this is essential to putting you. By the end of the day, it's going to be a large portion of your return on investment that you're going to have in the next bull market if you do your homework now. So congratulations. If you're watching this right now, you are among those that have understood this, that they have to do the homework now. So enough said. Let's look at two metrics here. And the first one is this one, which is, let me see if yeah, you can see this. All right. I wasn't sure if I made the chart big enough. Also something I talked in the last video already about, but it's so essential. I want to recapture it here on the live webinar also. And it's basically looking at the total crypto market capitalization. So the worth in US dollars of all cryptocurrencies in existence combined, which currently is at roughly 1.1 trillion US dollars. And it's applying some metrics on there to define a lower band and a higher band, an upper band. So the upper band, of course, you see here at the top of the chart, the lower band at the bottom of the chart, plus also a so-called fair value, which is the red line on the chart here. So, and it helps you to determine where in the future, if this current trend I'm talking about here is the last 11 years or 12 years of Bitcoin and cryptocurrency development, if this is going to be projected in the future. And there are a couple of learnings we can take away from this. The first one is that you'll see that this curve is flattening. So if you look here at the time between 2011 and 2014, you can see this green curve, this green channel is quite steep, but since then it's gotten a little bit flatter. And this is natural because the market is maturing and the market is getting bigger. It's of course much easier if you look at the left scale here to get from 1 million market capitalization to 10 million, or even from 100 million to 1 billion. I mean, imagine Bitcoin has a market capitalization right now of over 500 billion US dollar. And the further we go up in the market capitalization, the slower this is going to be. Now, there is bad news and there's good news. The bad news is that probably the times where you can achieve something like 100,000% in return on investment within 2 years are over, at least for Bitcoin. Maybe not true for other cryptocurrencies. If you are searching for altcoins, we did a webinar on this 2 weeks ago. I'll leave a link to that for you in the description of the video as well. But if you are looking to invest in Bitcoin, or as a matter of fact, Ethereum as well, you can see kind of what to expect for the next years. And for many investors, and that was including me in 2022, it was already the time where we should have reached here on the left the 10 trillion US dollar in total market cap. Now, as we can see, compared to the time between 2011 and 2012 and 2013 and late 2013, beginning of 2014, and especially also here this time in late 2017, where Bitcoin reached 20,000 US dollars and the market cap was at almost 1 trillion US dollar already. We're kind of seeing an underperformance, right? So one would have expected that within this, or the bull cycle that we just finished, that we again would reach this upper band here somewhere between 6 trillion and 7.75 trillion US dollar of market cap. This didn't happen. In my opinion, it didn't happen because we had actually two black swan events that just were very, very unexpected. The first one, of course, being COVID. We're going to see the impact of that in the next graphic as well. The second one, now the aftermath of COVID, being that we see very high inflation rates throughout the world. I mean, here in Germany, we have an inflation rate of 5%, which we haven't had for decades, really. In America, we see 8%. Poland, I think, was like 9%. Turkey, I don't even want to mention. You are somewhere between 20 and 40% there. So this is something that wasn't really expected, but has quite caused some turbulence also on the market, of course, and that, in my opinion, led to the asset class cryptocurrencies as a whole underperformance. If that means like that in the next years, so when the next bull market starts, that we are going to see an overperformance and maybe overshoot this upper green band here, that remains to be seen. However, let's focus more on what lies really ahead of us for the next months. And one thing I noticed whenever I look at this metric is that when the cryptocurrency market cap dives below this red line, the so-called fair value, it tends to go sideways. So you can see this really here in 2015, 2016. It also happened to some extent here 2019, 2020. Actually, the low touch really was here 2020 March, when Corona first struck and we had those lockdowns coming in place. So if history repeats itself, we probably could see something like a sideways move until this lower band here catches up with a cryptocurrency market cap, which would be probably somewhere in the first or second quarter of 2023. Now, this does not mean that we are just going on a flat line until then. Don't worry about this. We are, of course, going to see so-called exhaustions rally that maybe lead us to 35 or maybe even 40,000 or maybe even above that. We are also probably going to see downswings that might lead us to 24, 25, or maybe even 20,000. Where really the bottom is, I'm going to show you with another metric in a minute here. But what we as traders and investors need to be prepared of is that we've probably entered a phase of the market for cryptocurrencies where things move sideways. Things maybe even are a little bit boring, where the interest of so-called retail traders, so your neighbor that you know is just maybe reading somewhere about, wow, cryptocurrency, somebody made $1 billion with that, is kind of fading away. It's kind of fading out of existence. But behind the scenes, of course, development continues. And it's just a matter of time until the interest sparks again. And this also fits very well in what I analyzed with my own charts the other day, where I said I don't expect very much action to the upside until earliest mid of November 2022. So this is something you should be prepared for, in my opinion. But the good thing is, and this is what I'm going to show you with the swing trade metric in the second part of this video, it's something you can actually capitalize on. Now, let's look at the second one here, which shows us more in case like what to expect price-wise. And this is really one of my favorite quantitative metrics, because it shows you the price of Bitcoin. And I'm looking at Bitcoin here because it has like almost 45% of the market capitalization of all cryptocurrencies. So whatever Bitcoin is doing, the other cryptocurrencies will do too, except maybe we are talking about cryptocurrencies that has like 1 million or 10 million in market capitalization right now. But this chart is so great, in my opinion, because it color codes the current risk level of a Bitcoin investment for you. And what you can see here is really simple. The more those dots in the price chart tend to go to red, the higher the risk is. So you can see here the last time it went to red, and even dark red, which is the highest here, it's between 0.9 and 1.0 in risk. The more likely it is that we see a reaction to the downside. And we actually did. It was the last time we reached those levels were in May. Interestingly enough, we didn't see those at the true all-time high in when was it? I think beginning of November, where we hit $69,000 in Bitcoin. Now, for me, at the phase the market is at the moment, which really clearly for me is a bear phase at the moment, is that we are seeing, and I want you to pay attention to those blue dots here. So at the moment, we are more in the light blue level, somewhere between 0.3 to 0.4 or 0.2 to 0.3. But whenever we reached those levels, look at here in the past, usually we would see dark blue levels with lower prices also occurring. We saw that. I don't think we need to pay so much attention here to 2011 because, I mean, it was a minuscule asset class back then, Bitcoin. But look here at this area between 2011 and 2012. We have the same picture here in 2014, 2015, with the same picture here in 2019. We had also one dark blue dot here on the 30th of March 2020 at 3,800 US dollars in Bitcoin. And this really marked the low. If you would have taken this as a metric, I want to invest once these dot turn dark blue, my God, you still would be up 1,000%. Unbelievable, isn't it? Even with Bitcoin coming down from 69,000 by such a large margin. And I'm showing you this because this is like one of those things that put a little bit headache into my head because it could mean that we still have not seen the bottom. And this could mean that we still are going to see a downswing maybe to those levels of 24 to 25,000 US dollars in Bitcoin, maybe even lower than this. And really keep in the back of your head there that if we swing to 24,000 US dollars in Bitcoin from those current levels here around 30,000 US dollars, this is another 20% we are dropping. It always doesn't look that much. You know, if somebody tells you, oh, Bitcoin is going from 30 to 24, it's like, as a seasoned Bitcoin trader and investor, you're like, man, it's like the normal volatility. But actually, it's quite a lot, no, 20%, especially if you are trading leverage. If you've been following me a little bit, you know that I have my orders ready at 24 and 25,000 US dollar. Somehow, I don't think we are out of a fire. I really wouldn't be surprised if we see another downswing like this. And first, maybe this volatility squeeze resolving to the downside. Okay, so this was the long-term picture we are seeing in Bitcoin. Now let's look more at short-term. So how can we as traders capitalize on a market like this? It's nice, you know, to have your orders, of course, ready. And it's also nice, of course, now in the summer, maybe to not sit every day in front of your charts and wait for the right entries to enjoy the weather a little bit. But if you want to swing trade, there's like one metric that I personally like to use, which is, it's almost too good to be true, in my opinion, which is from a site called cryptoquant.com. Again, you'll find the link to that in the description of the video. Now you need like a so-called professional access if you want the data and at the level I'm using it right now. But don't worry, I will also, if I get like signals from this, talk about this on our Discord server. So one more reason to join that maybe. And this is something that is called the ratio between taker, buy, and sell. And this sounds very abstract. Let me explain first maybe a little bit what a taker is when it comes to trading. Now, we all, maybe you've seen something like this here, which is an order book of Bitcoin, of the Bitcoin perpetual future in this case, to be more precise. So the red numbers here you'll see are all people that want to currently sell. So this is really live data at the moment. The blue numbers here are the prices where people currently want to buy. And you'll see here, for example, at 30,427, it's almost going away 2.6, and it's jumping very fast. People want to buy. So those are the limit orders sitting there in the order book. And as you can see, this moves like very, very fast. And now somebody that is considered a taker is somebody who's executing a market order. You know, if you buy Bitcoin market, it means you want to buy for the next available price, which is going to be the first red number here. So the lowest price somebody wants to sell at the moment. So at 30,426. Now it's 21. You can see how fast it moves, really, yeah. And if you want to sell, it's the first blue number on in this order book here, where somebody is willing to buy the Bitcoins you want to sell market. And so this is called a taker because you take liquidity off an order book. use the liquidity that's in the order book of people who are placing limit orders. A maker on the other side would be the person who places a buy or sell limit in the order book. This is quite important, and it's quite a difference. So it differentiates between, are you adding liquidity to the market or are you taking liquidity from the market? And so this metric kind of looks at what are those people who execute limit orders, which side are they trading at the moment, and it compares them to each other. That's why it's a ratio, yeah, buy-sell ratio. And if this metric, look at the left side here of this chart, is above 1, that means you are seeing more buy market orders executed at the moment. If it's below 1, you are seeing more sell market orders executed at the moment. And this can give us an indication on how the market expectation is at the moment. Now, the market always likes to do the opposite of what everybody's expecting. So when this ratio reaches certain thresholds, the market is very likely to go to the opposite side again. And those thresholds are, the ones I'm watching at least, are on the upside 108. So whenever this yellow line, this ratio goes above 108, this for me is an area where really short term, so this is a chart really just from 1 month. It's just looking at 1 month of data here from Bitcoin. The black line here is the Bitcoin price, obviously. The yellow line is the moving average for 24 hours of this ratio. And so whenever the moving average goes above 108, this is an area where I want to look for opportunities to sell Bitcoin, to go short Bitcoin. On the contrary, when we reach levels below 0.96, there are entries where there are areas where I want to look for long positions in Bitcoin, because I feel like the market is too much on the expecting the downside at the moment. And I've checked down all my orders here for the past month to show you here in a chart. So that would be this one, since the 20th of May, that is. No, I think there's one more. Yeah, actually here on the 15th of May is. And you can really see the magic unfold here, in my opinion. So remember, every time I mark this as a short was a time where this ratio between buy and sell orders of takers was above 108. So above, it's somewhere in between here. So this one, for example, was 1.09. Every time I have a green line here, that was a long order, because the ratio of buyers and buy and sell takers was below 0.96. And without adding any indicators, any chart analysis, any holy grail, momentum, RSI, MS, whatever indicators, you can really see how well this works. So it indicated you should short the market here. So that was at the closing of this candle. It indicated, hey, short the market here at the closing of this candle, at the closing of this candle, buy the market here at the closing of this candle, short the market here, that was almost at the top at the closing of this candle, buy the market, and that was really almost the top here, and short the market here. Now, 2 takeaways from this. So as you can clearly see here, is like with a little bit of money management, with a little bit of discipline, not over leveraging this, I'm going to tell you about this in a minute, is that you pretty much could have, almost timed the tops and bottoms of the market over the last month on this hourly chart here. So plenty of time, to at least get break even out of your orders, plenty of time actually to make 800, 1,000 and more dollars per Bitcoin in trading decisions there. Excuse me. And now imagine that you have this data here, and it's available for everybody. This is no secret things here. You can sign up here for CryptoQuant. I think it's like $99 or something a month. If you don't want to spend this, like I said, I'm going to talk about this every now and then on our Discord channel as well, and notify you about changes there that I see. But it's really it's something without any technical indicators that almost, yeah, it's almost scaring me to a certain part. I have to say that it's so precise in showing you where those short-term highs and lows can be. However, be aware that something like this is something that works very well when we are in a sideways market. Once the market starts trending again, so let's say we look in the future, and that's why the first part of this video was important, and we see that maybe we have reached those dark blue areas here. Maybe we've reached November 2021, first quarter of 2022, where you kind of think like, this is probably where the market slowly is going to start turn around and trending to the upside again. You want to be very, very careful with something like this. So this is something at the moment in a sideways market that works very well. Once the market starts trending to the upside, or maybe even to the downside a bit more, you want to adjust this maybe from 1 to 0.8 to a little bit higher, on the downside from 0.96 a little bit lower, depending on what side the market is trending. But you can see, and this is again also something that differentiates you from amateur traders, from beginner traders that are hunting those, yeah, you know, like in holy grail indicator strategies that ask like, oh, I want the indicator that is always right, that I just attach to a chart that is always right, where I don't have to think about anything, that makes me insane profits. There are things to a certain extent like this, but it requires you to go a little bit deeper. So you're not going to find something like this by just looking at indicators. You need to dive into a little bit of quantitative analysis. And I hope with today's live webinar, and with this I'm going to conclude my monologue here, I could help you a little bit. All right, so let's see if we have any questions. Anything you guys want to ask? Not. I think everybody has been blown away by me talking too much. So again, I invite you. I know this sounds complicated, what I'm saying here, but the markets are not easy. We are looking at a complicated system where a lot of institutions worldwide spend hundreds of millions and billions of US dollars every year to gain an edge. So the good thing is, compared to 20 or 30 years ago, those tools that the big guys out there to a certain extent are also available to us retail traders. And yes, I'm a retail trader too. You know, I don't have $1 billion US under my belt here that I can use for investing. And believe it or not, and even if you have 1 million or 10 million, you are a small fish here in that game yet. But you can see, even with doing your homework and taking this time that we are in a bear market right now, you can gain an edge, and you can be ahead of what 95% of those people out there that are chasing the holy grail indicators, that are using the same indicators that haven't been working in the classic settings for the last 30 years and somehow think they are going to work. This is going to give you the edge. This is, in my opinion, going to help you to be one of the winners once the market long-term switches from bear to bull market again. This is going to help you to be one of the winners in this sideways range we have at the moment in Bitcoin and cryptocurrencies as a whole. So thank you for being here with me tonight and listening to me. As always, guys, leave us a like, subscribe to the channel, open a trading account. I'm going to see you again very, very soon. Take care. Bye-bye.